think the dominant feature of the market right now today is the supply deficit. It's a supply deficit not only in crude oil, but especially on petroleum products. If we turn the clock back to March, April of 2020, when COVID first hit, we had the fallout from the oil war. Let's not forget that it was only 2 years ago where the Saudis and Russia uh, had a disagreement over cutting back oil production as demand was falling. Well, around that time, when you had this increase in supplies, weakening demand, the prices plummeted, and in the downstream sector, refining margins went negative. Jet fuel, airports were closed, transportation demand dropped. Well, look at where we are today. Right now, refining margins have vaulted over $30 a barrel. But we can't overlook the fact that one of the casualties during 2020 was in the downstream sector. A lot of refineries, a lot of capacity closed. Out here in Singapore, Shell refinery, 500,000 barrels a day, cut their capacity back to 250 by 50%. Other refineries were converted to terminals, to biofuels plants. So today we have a growing deficit on petroleum products and even bringing more crude oil into the market, as Joe Biden is attempting to do with the SPR program, the solicitations here to OPEC. Even with more crude, we are still constrained. We have a bottleneck on the refining side. We won't be able to get the product fast enough. So near term, I think that is very supportive. I see it as being bullish and not going away anytime soon.
And exactly, because the crack spreads, like you rightly mentioned, are absolutely surging right now. You've got some that are suggesting Aramco is going to be upping refining capacity, perhaps coming out of China. But when you see what Citi is suggesting, thinking near term we could see this is a little bit of a top, is that really credible?
Well, I have immense respect for Ed Morse, who's been in the industry for many years. And, it is a possible scenario. So yes, it is possible. You'd need a number of things to happen geopolitically, fundamentally. But again, this supply deficit is going to be persistent on the products. And we are now entering, well, last weekend we started the Memorial Day holiday, which signals the start of the peak driving season in the U.S. You've got the disruption of product exports out of Russia. As I mentioned earlier, the decrease in refining capacity. I think we are going to be pinched and pressured, to try to restore this shortfall for several months. We're going into the peak demand period. But, going back to Citi's point, I think further out along the curve, there is a potential scenario where maybe some things get worked out. Maybe you have the return of Iran to the market here. Things get resolved. That's another 500,000 barrels a day to maybe 1 million barrels a day. Plus Iran is sitting on about 100 million of floating storage. This could have an impact, but I think we're not going to see it until we get closer to the end of the year, perhaps in the fourth quarter.